afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 15th of May 2023 and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. He's coming out to us from Singapore. Now, Vishnu, it's always great to have you on the show.
Always good to be here, Brian. Thanks for for inviting me on a Monday. Best way to start the week.
Now, Vishnu, for a start now, I want to take a look at US confidence. On a weekly basis, the S&P 500 and Dow fell for the second consecutive week. There's all these issues around debt ceiling. The meeting that Joe Biden held with legislators has been postponed. Give us a sense of what's your take on how this is going to play out, and what are the sentiments out there in terms of investors?
You're absolutely right, Brian. So sentiments aren't great from the pricing that you suggested, 2 weeks of being on the back foot. Of course, the debt ceiling, being a can kicked down the road with the option of deadline extensions being revoked, at least in the preliminary talks, doesn't set a good stage for the US. But I think you hit the nail on the head with the confidence data. As ironic as that might be, there was actually more to do with the shortfall in confidence, in fact. So if we frame this as an anti-Goldilocks confidence number, because the confidence fell a lot more than expected. There was some moderation expected, but the confidence fell far more sharply, so it lower confidence. And yet the inflation expectations component, particularly the 5 to 10 year, rose sharply. So you get the worst mix of elevated inflation, deficient confidence vis-a-vis where markets expected it, and that sets the stage for the Fed to hold higher for longer amid a softer outlook. And that's why markets took a step back. And to make matters worse, this US outcome is against the backdrop of a similar narrative, albeit from different sources in China. So in China, we had imports data that came out, exceptionally weak, despite not record high, but despite very high trade surplus. So markets ignored the surplus. They say that doesn't matter. The demand component that is inferred from the imports fell very sharply. That was followed on by credit data that came out much weaker than expected. So there's a fear now that in China, the reopening cheer that markets had latched onto earlier, they are afraid that that ride might prove short in every sense of that word. So in terms...
Okay, the headline numbers though, and we're expecting everything from retail sales number, fixed asset investment, industrial production numbers, all coming out this week. The expectations are for higher numbers because of low baseline effects from last year. But what you're alluding to is the fact that underlying sentiment and underlying numbers beyond the headline numbers are actually not great at all.
Hey, you're right. I mean, the soft base effect that you're referring to is on two counts. One is on the year-on-year effect. The other is on a sequential basis as well. It's exceptionally soft. China just reopened. People are going out to spend, albeit very cautiously. They're spending not on the big ticket items. Firms are not investing in a big way, despite what the headline improvement is from a very low base. The numbers are fairly weak. And there's one more additional thought. As Chinese tourists start going out, the initial boost, the so-called revenge consumption that led to a huge leg up in the Q1 GDP, that may ironically fade because Chinese consumers may start spending overseas, and there's some source of leakage there. So there's a partial good news for tourism-reliant industries elsewhere, but the big picture is for those who are making big bets on China's demand, example, the commodity plays and all. These guys are taking a step back and saying, hang on, we probably need to reassess this.
Okay, now, speaking of tourism-reliant economies on Chinese tourists, we've just had elections in Thailand, and Thailand has, during Golden Week, achieved record numbers of Chinese tourists. The Chinese tourists were back. It was hard to get hotel rooms in Thailand in the peak period. But the Thai elections have proved very interesting because the opposition has made big gains, and also the Thai baht has shown very positive numbers.
Yes, exactly right. And so here, how I framed US earlier as the anti-Goldilocks data. This is the exact opposite, the diametric opposite, where you get a sweet spot. So the popular opposition has gained a lot of seats, the Move Forward Party and the Muay Thai Party, but it falls short of the so-called supermajority where they can pass bills through the Senate unimpeded. And that means that actually this may be the so-called uncomfortable equilibrium for politics, whereby the military-backed faction of politics doesn't get overly riled up by this win, which in turn means that political stability will be a better bet, especially because there will be fewer incentives for agitations or worse still spillover political unrest. So despite the win not being pushed to the extent of a supermajority, this may be the so-called Goldilocks outcome, where investors are a lot more assured about politics not impeding Thailand's natural path upward as tourism resumes, and that's why the Thai baht is rallying as well.
Now, Vishnu, it's the start of the week. What are the key data points and events that we should look out for this week that could move markets?
My suspicion is China is going to remain pretty much in the limelight despite this being the run-of-the-mill monthly data. I think markets will be pouring a bit deeper into those. Eurozone, Japan, Q1 GDP numbers are out. Markets will be looking at those. Although this will be a bit more backward-looking and the forward-looking risks are becoming the bigger thing to watch for. Some second-tier confidence data out of the US. In the region, BSP will be under watch because they are expected to stay on hold, but they're caught wrong-footed by the shifting Fed expectations. Some peso volatility is a particular risk, so the BSP will be a close watch. RBA minutes as well. The shift in RBA sentiments is not unexpected, so the bar is pretty high to get the Aussie bulls all charged up again. But nevertheless, RBA minutes and why the hawkish intent remains may be things that markets will be looking out for this week.
Now, Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure as always, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. This interview will be on our website as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.